Good afternoon. Today, I am recommending a buy on Mueller Industries, ticker MLI, with a price target of $182, representing 34% upside from the current price of 137.90. Mueller is not a speculative turnaround or high risk growth stock. It is a high quality industrial compounder that the market is temporarily mispricing due to cyclical normalization. Founded in 1917 and headquartered in Tennessee, Mueller Industries is a leading North American manufacturer of copper based products with major operations in the plumbing and HVAC industries. The company's operations are spread across key regions in Asia, Europe, and the Middle East, and has biggest operations in North America. Mueller has a market cap of roughly $14.68 billion and provides a 0.74% dividend yield to investors. The company has an above average P ratio for its metal fabrication industry of 20.08 and holds a strong return on equity percentage of 26.14%. Let's move on to the thesis. Mueller Industries is a buy because the market is undervaluing a resilient, high quality industrial business. The company holds leading positions in essential plumbing and HVAC components, serving largely non discretionary end markets that provide durable demand across cycles. At the same time, disciplined pricing and margin management have historically protected profitability. Earnings growth is supported by recent investments in automation, capacity expansion, and efficiency initiatives, positioning Mueller to benefit from operating leverage as volumes stabilize. Importantly, the balance sheet remains strong, limiting downside risk. Yet, despite these fundamentals, the stock is priced as though recent normalization represents structural decline. I believe this disconnect between temporary cyclical pressure and long term cash flow potential creates a compelling asymmetric opportunity. The key to any company's success is its leaders. Mueller Industries is led by CEO Gregory Christopher, who has spent over 34 years within the company across multiple operating roles and currently owns approximately 1.3% of shares, creating meaningful alignment with shareholders. Chief Financial Officer Jeffrey Martin brings over 30 years of company experience, reinforcing financial discipline and institutional continuity. The board consists of 8 directors with deep industry and operational expertise, supporting disciplined oversight across capital allocation, risk management, and strategy. Ownership is predominantly institutional, with firms like BlackRock and Vanguard among the largest shareholders. Insider ownership Insider ownership stands at approximately 3%, balancing alignment with strong external governance. Overall, Mueller's leadership combines long-term operation experience with shareholder alignment, reinforcing prudent capital allocation and sustainable value creation. Mueller Industries operates within the metal fabrication industry, which is divided among the non-service and service market. The non-service market has a market size of $22.55 billion and grows at an average compounded annual growth rate of 3.6%. Within this market, the cutting segment holds the largest share of 42.3%, with North America hailing as the top performing region within the same. Arakolar Metal is a major player with a 13% market share, and Nucor is another with a smaller 5% share. Mueller Industries holds a strong 1% market share as well. This is imperative for Mueller as 100% of revenue comes directly from manufactured products, which is also the metal fabrication non service market. The service market has a total size of $35.03 billion and grows at a faster 6% CAGR. 62% of this market is driven by the heavy structural metal fabrication services segment, with Asia holding a 39% regional share within the overall market. Though Mueller isn't directly involved in the service market, 87% of revenue is indirectly dependent on service providers' performance, making service demand a key sales driver. In evaluating competitive positioning, I first analyzed industry structure using Porter's five forces. The fabrication industry exhibits moderate rivalry and supply power, particularly due to copper price volatility. However, barriers to entry are meaningful given the capital intensity, manufacturing skill requirements, and established distributor relationships. Importantly, Mueller mitigates supply power through pricing pass through mechanisms, allowing it to preserve margins despite commodity fluctuations. Beyond industry structure, VRIO analysis assesses firm specific competitive advantage. Mueller's vertical integration and nationwide distribution network are valuable and difficult to replicate at scale. Its long standing OEM and distributor relationships create embedded switching costs, while operational discipline supports sustained profitability. The company's consistent 26% return on equity in a largely commoditized industry signals not just participation, but structural advantage. Porter explains the playing field, while VRIO explains why Mueller wins on it. In fiscal year 2025, Mueller Industries generated a record $4.18 billion in revenue, representing approximately 11% year-over-year growth. This performance was primarily driven by its plumbing and HVAC segments, which together account for roughly 77% of total revenue. These core segments serve essential, non discretionary end markets where Mueller maintains leading market positions. As a result, revenue growth is supported not only by cyclical recovery, but by durable demand fundamentals and strong competitive positioning within critical infrastructural markets. Between 2022 and 2024, free cash flow steadily declined. However, this is not due to operational deterioration, rather, it reflected normalization from record post COVID construction demand and peak copper prices. Additionally, increased capital expenditures and strategic acquisitions temporarily reduced free cash flow. In the future, these same expenditures and acquisitions have high potential to increase revenue and margins for Mueller. Though despite the normalization period, return on equity remains strong at 26%. The balance sheet remained conservatively structured. Institutional ownership exceeds 90%. Beta is at 1.03, indicating market level volatility. This strong data represents the strong financials of Mueller Industries and that the company continues growth despite a cyclical post crash period. I am setting a price target of $182 per share versus the current price of 137.90 as of February 2nd, 2026, implying 34% upside. Using relative evaluation, Mueller trades near the industry average forward PE ratio of 16.75x, which implies fair value around current levels. However, given Mueller's superior profitability, disciplined capital allocation, and consistent ROE, I believe it deserves a premium multiple. Hence, I apply the upper quartile forward PE of 21x, which results in an intrinsic value of approximately 161 to $162 per share. Separately, my discounted cash flow analysis yields an intrinsic value of 187.50, reflecting normalized earnings and steady free cash flow generation. Blending both approaches and incorporating a margin of safety, I arrive at a conservative target price of $182. The market is valuing Mueller as an average cyclical industrial, though I believe it warrants a premium based on structural returns and balance sheet strength. Feel free to refer to the appendix for the assumptions taken during the calculations. To evaluate ESG objectively, I created a custom framework scoring companies out of 15 points, 5 across environmental, social, and governance pillars. A score of 12 or above reflects strong institutional grade performance. For context, a 15 out of 15 would represent best in class industrial leaders such as Schneider Electric, which sets the benchmark for sustainability and governance excellence. Under this framework, Mueller scores 12 out of 15, indicating solid ESG positioning relative to peers. Environmentally, the company remains fully compliant with federal air quality standards and has reduced operational emissions since 2021. It also reports in line with GHG protocol and CDP standards, reducing regulatory and operational risk in a carbon intensive industry. Socially, Mueller has reduced its total recordable injury rate by roughly 40% over 5 years and now operates below the industry average, strengthening productivity and limiting disruption risk. Governance is a clear strength, supported by independent board, defined oversight committees, and disciplined capital allocation. While Mueller is not an AI native company, artificial intelligence serves as a meaningful margin lever within its operations. Through increased automation and smart manufacturing investments, the company enhances production efficiency while reducing labor intensity. Predictive maintenance and data driven inventory management lower downtime and improve working capital efficiency, strengthening cash conversion. Importantly, AI driven cost optimization supports long term margin resi- resilience in what is otherwise a commoditized industry. Data analytics also enhances pricing discipline and demand forecasting, reinforcing operation control across cycles. No investment is without risk. Mueller faces substitution risk from plastics, volatility in raw material costs, limited pricing power in commoditized segments, and exposure to construction cycles. Roughly 87% of revenue is tied to building and HVAC demand, making earnings sensitive to housing and commercial activity. However, pricing pass-through mechanisms, operational discipline, and a strong balance sheet help mitigate these pressures. Importantly, these risks are cyclical, not structural, and in my view, are already reflected in my current valuation. Mueller Industries is a quality business, has strong execution, and has attractive upside. Invest now.